October's numbers surprised us, and a few segments showed some unexpected strength that we're going to dig into. Let's start with the big picture, though, and then in the next video, I'll dive deeper into the details. And if you're just tuning in, my name is Christine Copper. I'm with Sotheby's Realty in Vancouver, BC, Canada, and I help people like you buy and sell homes in the Vancouver market. Every month, I like to jump into the stats as well as provide you on important real estate updates. So if this video is not in your inbox, make sure you subscribe to my newsletter or like and subscribe to my channel to get really important updates directly in your inbox. We're looking at the Greater Vancouver Realtor Board. It goes from Maple Ridge all the way to Whistler, but doesn't include the Fraser Valley. So keep that in mind. This is a broad overview of what's happening in the market at the end of October. So we hit 2,255 sales. That was up 20% month over month. It was really quite surprising because I didn't actually think that we're going to hit 2,200 sales. As we were going through the month, 3 weeks in, it just looked like we're going to be stuck at that 1,800 to 2,000 sales. So I was pleased to see that we hit 2,255. Plus, this is the second highest selling month of the year. If you notice, we hit 2286 in July, and we haven't really been able to break 2,300 sales in any month in 2025. That's a substantial difference from months in the past. And you can see that here with respect to sales, year over year, we're 14% below October of last year. And we're also 15% below the 10-year average. So it just goes to show that sales have been very slow but steady and not anemic like they were in 2018. So we are slightly better than the 2018 to 2019, early 2019 market. While there has been some negativity around the marketplace, we really are just hanging in there. And when you compare this year's 10-year average compared to last year's October 10-year average, last October actually had quite a pickup of activity. In fact, it was only 5% below the 10-year average. So we had a flurry of activity after a bit of a quiet time of the year. You can see that with respect to sales, they are lower. We've been trending in this place, but they're getting better because we had, sales that were 25 to 30% below the 10-year average earlier this year. With respects to new listings coming on the market, we hit 5,438 new homes came on the market in the month of October. That was down 17% from the month before, demonstrating a slowing pace of new inventory, which is less common for this time of year. This is the second busiest time of year, and it was only 0.3, so basically flat, 0.3% above October of last year with respect to the amount of new listings that came on the market. So you can see that the additional inventory is starting to stabilize in terms of the amount of inventory coming on the market, and sales are fairly steady as well. In terms of how those new listings that came on compared to the 10-year average, it's still 16% higher than the 10-year average of what we're used to. However, as I was saying, it's starting to stabilize because last year, October saw 20% above the 10-year average with respect to the new listings coming on. Our total amount of available inventory at the end of October was sitting at 16,393 homes available. That was down 4% month over month. So that was a pleasant surprise, a little less inventory, and not as much came piling on, and sales stayed a bit steady. But to put that amount of inventory in perspective, we're still 14% above last year in terms of the amount of inventory. I think we were sitting around 14,000 homes available, and we are still 36% above the 10-year average. So the name of this year is high amount of inventory, which means a great selection for buyers. Sales are steady. They're not high, but they're steady below the 10-year average, which has allowed for this accumulation of inventory, but things are kind of like humming along. Sales aren't dead. There's the activities happening, but there's lots of selection for buyers. And if you wanted to compare that to the amount of inventory that was on the board last year, it was 26% above the 10-year average. So you can see that we are in a high inventory market. But then again, it feels like things are balancing out, and that's as evidenced by the month of inventory. So I like to track months of inventory because it's a clear-cut supply and demand. It's 16,000 homes divided by the number of sales in October. If we had no new inventory, how many months would it take to sell through all that inventory? And currently it's 7.3 months of inventory, down from 9 months of inventory, which was great to see because 9 months of inventory was the highest we've seen. And 9 months of inventory is definitely in buyer's market category. Anywhere 6 months and above for a sustained period is considered a buyer's market. 4 to 6 months of inventory is balanced, and anything below 4 months of inventory is considered a seller's market. And we have been bouncing around between 7 and 9 months of inventory all year. And that's why it's no surprise that we're starting to see this erosion of prices. They're hanging in there, but we get these point 0.3, point 0.5, sometimes a percent decrease month over month. And after a couple of years, that adds up. Currently, we're sitting at 1.133 million for the benchmark price, down from the month prior, 0.8% or virtually flat, but almost a percent on $1 million. And it's down 3.4% year over year. So that's the overall look for what's happening in the Vancouver market. We're going to jump into months of inventory, or the sales to listings ratio for Vancouver West and Vancouver East, as well as what prices did in the next video.